want to share a quick video today on building a team, or what building the ideal team looks like. A lot of mortgage brokers that are starting their business or building their teams come to me and ask me, like, Anthony, at Garden State Home Loans, you guys build an assembly line, a team of people that helped you scale to 300-400 loans per month. How did you do that? So I just want to share today kind of what I see being the support system that will allow a one-man originator to become a rainmaker, to allow a team to perform at the highest level by having a back end that really supports them to best serve their customers and best serve their real estate agents. So let me get started with a couple positions that I think are the most important and key positions. Number one, pre-underwriter on your back end. This is probably the most important position that you're going to hire for. The pre-underwriter I look at a little bit differently than most people look at. A lot of people think when they're hiring, they're going to hire a processor, and that's how they build their business. Is the processor sort of does everything on the back end. The way that we did it is we focused on creating a couple different positions that broke down the process a little bit more granularly, and didn't put all on one person. But for us, the pre-underwriter is probably somebody that either has an underwriting background or is an exceptional processor. And that person really is going to be the one experienced person that you have to have on your team. The way we built our team is we hired a lot of people that were not mortgage professionals as far as their career goes. We hired people out of college and we trained them. And this person right here is the person that really trained a majority of the people in our fulfillment cycle. So you're going to spend money on that person depending upon what market you're in. That can look very, very different, whether you're in California or you're in the South or the Northeast. The cost of an experienced pre-underwriter or underwriter that's going to come in and be the head of your fulfillment is going to cost you a little bit of money, but they are well worth it, as long as you're getting somebody that's focused on being able to train supporting pieces and being part of a long-term vision in how you're building your business. You don't want to get somebody that's spent 20 years working for a non-bank lender or for a bank. You want somebody that is probably I would say 5 to 7 years experience would be the ideal experience that you're looking for. So let me go through what the entire fulfillment cycle looks like in a perfect world. So the first position every loan starts with is going to be your loan coordinator. So at the time that your application is complete, so whether you're using a point of sale and the customer completes the application at the point of sale, or you're taking an application over the phone, the loan coordinator is going to be the person that reviews that file and validates that file. If you ask any lender or any underwriter where 99% of the issues stem from in a loan during the underwriting process of loan, it starts with a loan application that was inaccurately taken or misinformation was in the application. So what this person is doing is they're going to validate your loan application. What does that mean? They're going to check the address against the U.S. Postal Service to make sure the address is properly reflected on the application. They're going to review the pay stubs and the W-2s to make sure that the employment history correctly reflects the correct employer name, reflects the time on the job that is accurate. The salary information should be correctly reflected. It's also going to start to go through and look at things like, hey, on the tax returns, how many dependents are there? Well, how many dependents are on the loan application? Are there different addresses on the tax returns and W-2s as you go back 2 years? Meaning, if they're looking at tax returns from 2 years ago and the address is different from the most recent tax return, did our borrower change addresses? That's something that they're not going to proceed with till they get an answer on. So validating the application is a key part of the process. They want to make sure every detail in that loan application is correct. Things like property taxes, that's one common item that a customer might put X on the loan application when they're going through it, but it's not actually the correct number that's on there. In addition to that, they're going to review any documents that were submitted by the customer. So whether it's a W-2, a pay stub, a tax return, a purchase agreement, they're going to go through that entire set of documents because they're going to have a checklist that they're working off of that identifies what do we have now and what's outstanding, what's going to be needed from the customer in order to complete the process. So they're going to go through their checklist as they're reviewing that documentation. Things that they're going to spot early on is, hey, did we get a bank statement that only had 2 pages out of 3? We need that 3rd page. Hey, did we only get, did the customer give us a pay stub that had something cut off or blacked out? That's a case where they're going to go back and tell the customer, hey, this is why we need a document that's not without redacted information or that doesn't have any cut off information. So it's really important at this point that this person is very, very confrontational. We want all the things that they're doing to happen within 2 hours of a loan application being complete. This is all about creating a very fast start to the process. Next thing they're going to do is they're going to confirm the contact information for all key contacts. So they're going to want to confirm the buyer's agent's contact info, the seller's agent's contact info. And when I say info, depending upon whether it's a government loan or a conventional loan, you're going to need to have their licensing information. You're going to need the address of their offices. So those are all data points that this person's going to be collecting. They're also going to collect the title insurance company's information or the escrow company's contact info. Also, if there's an attorney on the file, it's really important to get all that contact information up front at this very early stage in the process, because that'll expedite the rest of the process. That'll make sure that whoever gets the file next isn't sitting there gathering or asking for information that this person could get early on. Then they're going to run AUS, and it's a key point that they're running dual AUS early on because they're going to want to evaluate, did we get an appraisal waiver? Is 1 year of tax returns required? Is, how many bank statements are required? And that's how they're going to position the file as far as what documentation is needed going forward to keep the process going. So once they run that dual AUS, whichever AUS is the friendliest, they're then going to request the outstanding documents from the customer based upon what documents were received and what documents are outstanding based upon what's required on those AUS findings. So they're going to go back to the customer and either send them an email or request it through the point of sale and identify these things as outstanding items. Those documents aren't necessarily required to be submitted at this point, but by starting the request as early in the process as possible, it's going to create the urgency for the customer to start gathering those documents. So, if you're asking for that within 2 hours of the application being complete, if it takes them 3 days or 4 days or 5 days to get you that documentation or information, you're in great shape because you request as early on in the process as possible. It's not sitting there waiting until disclosures got completed or waiting until the loan processor got assigned to the file. It's being requested right at the time of application. Next thing that is going to happen is they are going to order the appraisal and title. They're going to order the appraisal and they're going to register the loan with the lender. They're either going to float or lock it based upon what the loan originator requests of them. Then they're going to generate the loan disclosures and send them to the borrower, and then they're going to order the appraisal and title. So their goal is really kind of a setup position. They're taking the loan from application to the file being fully disclosed and signed off on by the borrower. And the goal is to put the file in a position where once it's handed off to the next person in this assembly line, that they have everything they need from the borrower. Disclosures have been signed off on. All documentation that's outstanding based upon what the AUS findings are requiring versus what's been submitted by the customer has been requested. All appraisal and title has been requested. All of the key contacts have been identified. And that file is now in a position where when the pre-underwriter, who's the next person in this assembly line, gets that file, they're getting it ready to be submitted to underwriting. They're getting it in position where they can take the next steps and nothing's holding them back. There's no bottlenecks here. So this whole entire process, from the time the application comes through to the time they complete all their steps, this is something you want to get down to 2 hours. Now, obviously, if you're training somebody to do this position, it's going to take some time to train them up, coach them up, and get them in a position where they'll be down to 2 hours. But eventually, when this person's up to speed and they're firing on all cylinders, this is a 2-hour file turnaround. Now, the next position is the pre-underwriter. The pre-underwriter is somebody that's going to be your most experienced person in your assembly line. In my opinion, this is the most important person you're going to have in this fulfillment cycle. This person is going to be reviewing income and assets. They're going to be making sure they're looking at the pay stubs at a very low granularity, meaning are there any garnishments? Are there any, is there a judgment? Are they paying child support? Are they paying alimony? Does the income match up with what their pay stubs show the income as far as what their direct deposits are? Are there any bonuses that weren't accounted for? Did the person get a promotion? How long have they been at their job? This is a full income and employment analysis. This is really making sure that when the underwriter reviews that file, that all expenses, all income, everything's been properly calculated, so no surprises are going to come up once the underwriter's reviewed everything. Same thing with assets. Are there any large deposits? Is there anything that we can better prepare this file for underwriting? Meaning, if there's 2 months ago there was a large deposit in a bank account statement and the loan's not closing for another 45 days, can we wait for another bank account statement to come out to avoid having to answer for or document that large deposit? This person is really, truly pre-underwriting the file. Their whole objective is for this file to come out of underwriting with 3 conditions or less. So income, asset, and employment analysis, that's going to be premium part of their job, because that's the biggest area where submitting a file and not accounting for misinformation creates a lot of conditions. Next thing, contract with all addendums. It's important that all addendums is stressed. We see all the time, a real estate agent or attorney adds an addendum onto a contract, and it's not submitted until the loan's been in underwriting. That's a problem. We need to make sure all those addendums have been reviewed. Were they submitted properly to the appraisal management company? Does the contract purchase price properly reflect the final price based on what's in the addendum? It's really, really important that those documents are reviewed, that they're structured properly, and they're not submitted to underwriting without being reviewed by the pre-underwriter. Appraisal review. Did something come up in the appraisal that could cause an issue in underwriting? So reviewing the appraisal, not just assuming that everything's going to be correct with it. Now, obviously, most appraisals, once submitted by appraisal management company, go right to underwriting. But there's still usually a day or two before the underwriter reviews that appraisal. So it's important that the pre-underwriter is reviewing that appraisal. Did the appraisal come in short? Is a restructure required? Is there a reconsideration of value need to be submitted? It's really, really important that this is being attacked very quickly, because as we all know, a bad appraisal or a short appraisal can derail a whole deal. Request and track down required information. So we know the loan coordinator already requested anything that was outstanding based upon the difference in what was required on the AUS findings and what was submitted by the customer. But at this level, the pre-underwriter is digging deep. They're really making sure that all large deposits are properly sourced. They're really making sure that every single pay stub has been properly collected. Anything that was missed on the upfront part of the process that's not picked up in the AUS findings, they're going to make sure that they're requesting those documents, getting those documents, and have it in their hands before they submit the loan to underwriting. Submit file to underwriting. Again, the goal of this job is to make sure that file comes out of underwriting with 3 or less conditions. We want to make it a very, very soft file to process for the back-end processor / closer that's going to be getting the file next. So when that file comes out, there should be no income conditions, there should be no asset conditions, there should be no employment conditions. The only thing outstanding should be appraisal, title, and homeowner's insurance. It should be really, really completely done file. Credit supplements, if any are required, that's something the pre-underwriter is going to be ordering. Managing any file restructures. Appraisal comes in short. DTI somehow is higher than expected. They're going to restructure that file. Anything that involves a restructure on the file, the pre-underwriter is going to own it. They're going to present the options to the loan officer and put the loan officer in a position where they can immediately give the customer what the available options are, not put the loan officer in a position where they have to do the restructure. Again, major goal, file comes out of underwriting with 3 or less conditions. Super, super important. That's the only way for this assembly line to work, is if you're taking the burden off of the back end and off the front end and pre-underwriting these files before the underwriter sees it. The last position is once the file comes out of underwriting and it's approved, and there is only those 3 or less conditions, the processor is sort of a processor / closer. They're not going to be sitting there gathering documents and dealing with 100 conditions on a file because the pre-underwriter took that burden on. They're going to be handling submitting any final conditions to underwriting, gathering any invoices that are needed for settlement, scheduling the closing, reviewing the final CD with the clients to make sure everything is as they expected, and doing a post-closing file QC to make sure did our check come in from the title company? Did we receive a copy of the closing package? Is everything in order in this file? Updating the important dates, the key dates in the LOS to make sure they're ready for the MLS report. So they're going to do a full QC on the file as well. So this is a processor / closing, post-closing position. Again, a lot lighter on the processing part of it, a lot heavier on the back end part of it. And then they're going to be packaging that file for compliance for post-closing for you. So stacking it, scanning it in if you have all your files scanned, but putting it in a position where if you get a bank examination or a regulator comes in and they want to review that file, it's ready to go. It's been reviewed. Nobody has to do any further work when they're coming in. So that's the assembly line we created: loan coordinator, pre-underwriter, processor, processor / closer. The way that I would go about it is you hire a pre-underwriter that's experienced. You're going to pay a premium for that person. That's going to be somebody that most likely is going to be in the $55,000 to as much as $90,000 range. But you're going to get somebody that's good and somebody that can train your inexperienced people. So when you hire the loan coordinator and the processor / closer, because those are positions that are lower touch in the expertise area and more focused on following instructions, following a checklist, going through a lower touch process as far as knowledge and mortgage experience goes. Those are training positions. So these are positions that we always looked at as entry-level positions that we would hire people either out of college or from outside the industry, train them up. They would be mentored by the pre-underwriter. They would slowly but surely get to the point where they can handle all the tasks of the position. And that usually takes about 6 months of ongoing training to get to the point where their experience level can actually do all these different things. But what the big upside for you is if you invest in training people to learn your way of doing business, in learning your system, now you're in a position where you've created an assembly line at a manageable cost. If you go out and you have 3 experienced people all getting the premium of an experienced person, that's going to be very expensive. If you go and you focus on getting one really good experienced person and build around them with some inexperienced people, it might be more difficult in the short term, but long term, you're going to be in a position where your cost structure is balanced. You have a lot of room to go up to incentivize members of your team, but more than anything, the processing and fulfillment is not dependent upon one person. It's now spread out across 3 people. So if somebody takes a vacation, somebody needs to take time off, your whole operation's not going down. That's what I see a lot of times when a broker or a loan officer is dependent upon one processor. So this is the assembly line that we created. And again, it might take you some time. You might start with the pre-underwriting position with the goal of expanding to the loan coordinator position. But you should go into how you build your team thinking about this type of structure, because this is the type of structure that will provide work-life balance, it'll provide your customers with a predictable experience, and it'll put you in a position where you're never ever dealing with the ups and downs of losing an employee. Last position I want to talk about is a sales assistant position. This is a position that is really, really key, and what it comes down to is, as the rainmaker, as the loan officer, or the team leader, or the broker owner, you have to be in a position where it's not all dependent upon you as far as contacting and staying in touch with your customers, your real estate agents. You need somebody that's supporting you and putting you in a position to be successful long term. I always had 2 emails set up. I had my Anthony at Garden State Loans email when I was at Garden State Loans, and then I'd have like an Casa at Garden State Loans email. My assistant would always work out of my secondary email, acting as me with a signature as if it was me, but they were doing a lot of the follow-up for me. They weren't quoting customers or getting into anything transactional. They were strictly managing my database of contacts. So they're the ones that are going to be following up your real estate agents and prospecting them. So whether that's sending an email to say that you have a loan that you want to thank them for a referral, whether that's an email saying that they did a great job on the past file. If it's sending a seller's agent an email saying that you got see how their clients were so happy with how well the purchase transaction went for the buyers that you handled. This is a person that's going to be dedicated to staying in touch with as many real estate agents as possible and keeping your name in front of as many real estate agents as possible. Managing your leads and your customer relationships. So, if you get a client that is pre-approved and is a longer-term purchase cycle, meaning they're looking in 3 to 6 months, well, your assistant's going to be following up with those people. Or if you have somebody that was referred to you that's going through some type of credit repair, your assistant's going to be following up with them. Their whole goal is lead, customer, and B2B relationship management. B2B relationships are your referral sources, your builders, your accountants, your real estate agents. Thank you cards. So if you're sending thank you cards to your customers or sending thank you cards to your real estate agent or anybody that's referring you business, they would be sending those out on your behalf. Annual customer check-ins. It's been a year since the time a customer bought a home, sending a check-in email. Any type of stay in touch, top of mind email, happy birthday email, you name it, this person's going to be managing it for you. Appointment management. I'm setting up appointments with you to talk to new customers, to talk to new real estate agents. They're going to be managing all appointments. Follow-up communications, any communication. So you quoted a customer, they're going to be following up with that customer to see if they got the quote, if they had any questions, when they're going to be able to complete the application. If a customer starts an application but doesn't complete it, they're going to be following up with those people as well. Social media management, so just staying on top of your social media. If somebody goes onto social media and makes a comment on one of your posts, somebody needs to respond to it. So this person's kind of a consumer, customer slash lead slash referral source manager for you. Again, this is putting you in a position where you're making an investment, an entry-level position that you're training to help support you, that puts you in a position long-term to have more balance and to scale your business. Now, anybody that's starting from scratch, you got to start somewhere. So to me, you start with your pre-underwriter first, and you start with your sales assistant next. The goal is to put yourself in a position where you can hire and train. You want the sales assistant that you hired today to evolve into the loan coordinator. And before that happens, the sales assistant needs to train a new sales assistant to replace them. So when they do become the loan coordinator, that's a transition that can happen. So, and again, the next thing would be the person that becomes the loan coordinator, their next opportunity to move upwards would be training to be the processor or the closer. So again, you want to constantly be in a position where when you're starting with entry-level people and you're grooming them, there's somewhere for them to go. Because if there isn't somewhere for them to go, they're going to leave your company. So the reason why I started with the pre-underwriter and the sales assistant is there's plenty of place for the sales assistant to go upward because you have 2 other positions you need to develop. And not only that, but you have a pre-underwriter that they want to have a diversified, they don't want to have it all on them. They don't want to be in a position where they have to work 50 hours, 60 hours a week, every single week to keep up with their pipeline. So when you have those 2 people that are vested in your team, you're going to see that you'll be able to develop a scalable model. You're going to have a culture where people do move up, and you're going to see a work-life balance for your organization through good times, through slow times, you name it, that keeps you in front of your customers, that keeps you in a position to take on lower margin business if necessary, and puts you in a position where you have a diversified team. So I hope this was helpful. Look forward to talking to everybody soon. Have a great day.